Alright guys, I'm going to do a quick video because it was requested on how to do debit spreads. Now I do like doing call and put debit spreads because it is a lot easier to swing positions by utilizing the spread. There's a couple things to the spread though. So your upside is capped, and we will get into all of this. So you can't make 1000% gainers on, it's not like naked calls or naked puts. But with that said, it is a little more forgiving. For instance, I was in some Amazon spreads. I had 8 of them. And that's another thing. You can leverage as much as you want. So I had 8 spreads and things were going great. I was up on the position. I was still swinging it because I had 10-10 expiration. Then we had a big drop in the market on October 1st. And, my position was down, but I had so much time that I held them and we bounced back. Now, it doesn't fully negate theta, but it sure helps. My position snapped right back and I was able to make like $200 or $300 on the position, even though I had the 225, 230 calls. And it only ever went to like 220, 280. But because I had 8 of them, I was still able to make money. It was not max profits though. Now, a couple things to know. So, a call debit spread does not fully negate theta, but rather offsets the theta decay of the long call with the positive theta from the short call, resulting in a net positive or slightly negative theta for the spread. Now, theta decay is what hurts your options, especially 0 day to expiration or weeklies. So if you are going to play naked options, I would suggest buying at least 30 days to 60 days and more out. Give yourself some time for that position to work and be correct. All right, now let's get into how to build one. So yesterday, I talked about AMD is about to go in the Discord, ascending triangle on the weekly, gap above on the daily. It looked great. AMD gapped up today to 170, and I think it's going to head to 180 plus. Now, I want to give myself some time to be correct. The thing about spreads is, in order to be getting max profits, which you don't have to hold to max profits by any means, but if you wanted max profits, you need to be as close to October 17th above both strikes. So if I think it's going to go to 180, I could choose the 175, and I'm going to buy this one, and then I'm going to sell the 180. So the difference in my strikes is $5. That is $500. Just keep this in mind. So that my max profit is $500 minus my debit that I'm paying. So right here, max profit 351, max loss is 149. It should say call debit spread up here if you're doing it correctly. Now, if AMD goes to how I think it's going to go, I do believe it's going to, get into the 180s pretty soon here. It's looking really good. So if we get above both strikes, and if it goes to 200, then you can hold to expiration, no problem, and get max profits. But if it's kind of teetering, say it's at like 182 or 185, and there's still a few days left, well, you don't want the market to flush the next day and you lose all your profits, so you may close it. But if AMD just goes on an absolute ripper, then yeah, you can hold it and get your max profits. You can also just buy multiple ones of these and leverage yourself. But yeah, it's a really great way to swing options. And another thing is the flow for AMD has looked really good. Just to show you guys real quick, in case you did want to hop in this trade or watch AMD. But 22 million in calls versus 3.5 million, and most of these are out to mid to end October. So yeah, I'm definitely looking to actually hop in this myself with some spreads. That way, if you did get in and AMD has a pullback day, it's really not going to hurt you that much. Whereas if you're a naked call, you might lose half your percent on your option very quickly. So, and the same thing goes for puts. If you wanted to be bearish on AMD, which I do not suggest you do, but you would buy, let's say, the put, and then you would sell the one $5 later. The reason I don't really like these half 167.5s is the open interest just isn't as good on those. You'd probably still get filled, but you want to make sure that you have a lot of open interest and volume on your contracts. So pick a liquid strike price and a liquid ticker. Don't be doing this on, not very liquid stocks, or you won't get filled when it comes time to sell. But that's pretty much it. Let me know if you have questions in the comments. I'll try to answer them. Please like and subscribe, and have a good one.